Well, hello, fellow investors and traders. I'm L.A. Little, and this is your weekly NeoTA wrap. Where we take a look at these markets unlike anyone else. We use the neoclassical method, asking ourselves each week what happened last week and what does it tell us about the coming ones. I do this show once every week, Sunday evening, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel L.A. Little. When I say we look at this market on a weekly basis and we look at it from a neoclassical perspective, what I'm saying is you don't have to know where the market's going long term. If you evaluate it on a continuing basis, you will be positioned the way you need to be positioned when the long term becomes the current. That's the beauty of neoclassical. That's the beauty of looking at time frames, evaluating daily, weekly. In that way, you're always where you need to be. You can avoid the huge drawdowns. In 2008, we actually made money using this model when others lost 40 or 50% of their portfolios. Check it out. Come to TA today and see what we do. As far as what happened last week, let's look at Friday's numbers. Actually had a big turnaround, 2% across the board. Half of that size-wise in terms of the Russell, it trailed. Of course, the Russell led for about 2 weeks, so a little bit of give back there, not huge. Overseas, in Europe, you had a little bit more pressure. I suspect they're going to get a bounce now, given the way the charts have set up. We'll look at their charts. Gold had a huge day finally, big spike up. We'll take a look at it. Oil, the opposite. OPEC couldn't agree on production cuts, and so we took a big hit there. Asia, I expect, is going to see some money rotation as well. Dollar, a little bounce after a drubbing on the Draghi news from Thursday. So if you look at the markets overall, last week you basically were flat. You were negative on the Russell, but outside of that, it wasn't a bad week. So we pull the charts up. We'll start with the S&P 500. You had a lot of gyration last week. To start with, you had a bearish engulfing takeaway bar on Wednesday, and then Thursday the follow through, and then the takeaway bar on Friday, taking you right back up to where you started the week, basically unchanged. So a lot of movement, a lot of pressure. But in the end, they press it right back up where they were. If you look at it on a weekly basis, you have a long tail here pressing right at the highs still. The breakdown bars tops 2103.47. That's still the target. You got over it last week. You couldn't stay over it, but you're pressing with pretty decent volume. I expect it's going to try again. And so that's the S&P. If you look at the NASDAQ, you're going to see almost the same picture, essentially the same picture. You still had those two takeaway bars down and then up. NASDAQ pressing right up here, trying to get over the high, the recent high 51.63, and targeting the top at 52.31. Now the NDX, of course, has been the strongest. Same situation here, takeaways. This one even stronger on Friday. This one's coming back up to get over the high, 47.37. And that high that it already previously gotten over was 46.94. We go down, we test, and this was an important test. And what I'm talking about, of course, is the bullish retest regenerate, because it tells you that this market doesn't want to give it up. It had tested under it here, came right back over it, tested back down into it again, couldn't get under it. This thing wants to work its way higher. So we've got the NDX still leading, still wanting some rotation, not getting it yet, but potentially you're going to see that. Russell, not as big a deal. Russell had been the leader and had held higher and better than others. I expect the Russell's going to try to go after this breakdown bar's top, which is 12.25. If we pull it over and look at the overseas markets, we're going to see some rotation. Not so much rotation, but we're going to see some pullback in Europe off the strong euro compared to the dollar. That, of course, was generated as a result of what Draghi did on Thursday. So we had talked about this trying to come back into potentially this bar on the DAX, although I'd suggested it probably wouldn't get there. The more likely scenario was for it to test on the daily back into this bar. The bottom there is 10,586. We got to 10,632. So we could test a little bit more, but I suspect we're near a bounce here on this particular index. Let's see here. Volume is 1083 coming into 1201. So the volume on the way up, right, on this gap up here. So this is the gap up area, right? In this little gap, the volume on that particular bar right here, right, higher, and we could actually draw it in a little bit higher than the volume coming back. You get a doji kind of reversal potential. I suspect you're going to get a bounce up into this, and then we'll come back down. What they'll try to do now is they'll try to set up some sort of an ABCD structure, a bearish one, right, to try to take this down deeper, get it back into this swing point high. This swing point high is going to be the bullish retest regenerate. Way more than 6 bars since this breakout. I expect that's going to be the ideal place to look at Europe one more time. And so that's the way Europe's setting up. We could look at the CACs. It's probably going to show about the same thing. And it does. Here on the daily, you came back into this bar. Although it's a little weaker, it's got a little bit more volume, it looks like, which also tends to support the idea that you're going to see further deterioration after a bounce. And we were talking about it trying to come into this bar, 46.86. Got right to it, 46.70.99. So it comes into it, closes 47.14. So you test into it, look at your volume tells. Again, this suggests you're going to get the bounce. Your volume tells it comes back, doesn't have the volume. This thing's going to bounce, and then we'll try to get some more downside after that. When we come right back, I'll take a look at the OX markets, in particular gold, the dollar, and a few others. I'll be right back.
Do you have retirement funds you want to keep invested, yet you constantly worry about a potential market crash? As LA says, you shouldn't worry about a crash until it's time. Through LA's extensive research, he has identified the key characteristics that are necessary for a market crash. In the 2008 crash, for example, our investors actually made money and avoided huge losses through LA's investment advice. Because the markets usually go up, our retirement service keeps you invested when risk is low and reduces your exposure when risks become elevated. There are 3 portfolios you can follow: aggressive, balanced, and conservative. It's a simple process at a reasonable cost that requires very little of your time. To learn more, go to our homepage, hover over Retirement Service, and click Get Started.
And as we come back here, I would only echo on that commercial break that you really should check out the retirement service. I mean, it's easy. Just come here, click Get Started. You can read about all the things with the retirement service just clicking on or just hovering, and then, how to outperform, how does it work, so forth. That service we've left at $75 a year for an introductory offer for this year. And we'll be turning that up, raising the price end of the year. And so if you are interested, you have until the end of the year to get in on that price. There's a 5-year guarantee at that low introductory price. That will be going away. So check it out if you're interested in long-term performance without the risk of being in the markets all the time. As far as being in these markets and what's happening, let's look over at the dollar. If you remember, we had that huge move down off of Draghi's under delivering on the QE. So you get a bounce, your inside day, volume's really shrunk here. You've got a top at about, well, a big gap starts here at about, what is that, 25.73. And if we go back over to this bar, that's 25.82. This is going to have a tough time getting much higher. You may get into that 25.80 area, but that's probably going to be about it on the dollar itself. If we move over and look at the euro, which is really the driver of this dollar weakness, that's where the story really lies, of course. You had to press up. This thing drove 3% higher, which is huge on a currency. The gap down starts at about 105.70. If you look underneath that, you got a prior swing point high here and there. That's at 105.15 and 104.90. So I suspect that's going to be the area on the way back down where this tries to trade to. And that's about as low as I would expect it to get if it gets anything underneath that. The topside target here now is back up to this swing point low to do a bearish retest regenerate, and that's up in the 109, 109.50 area. And so you can see this could make another larger move before it's over. That, of course, will put pressure on the European equities. We just looked at the DAX and the CACs. That ABCD bearish that I was talking about, that's how it would work. And so if you can imagine, you've got some sort of a large move here. You may get a test of it here that fails initially, right? Get some sort of a pullback, maybe as deep as this, and then try to make the run up to these areas. And of course, this run here would put pressure again on the European equities. That's the way the euro looks. And if we move over and take a look at the continuous commodity index, what you're doing is getting a bounce in it as a result of the pullback in the dollar. And so these markets, of course, all intertwine. They all make sense when you think about it this way. But you kind of got this nice little rounding action taking place. Where can these go to? Well, they can go back and do their bearish retest regenerates. And so you're probably about halfway on the move in that cycle. And if you look at gold, gold being one of those commodities, had a huge spike up on Friday. That, of course, off that same idea, right, with the dollar weakness. If you look at it here, that's the bearish retest regenerate. In order to get there, it's got to get over the swing point high. It tested into that high on Friday, 104.09, closes it at 104.02, doing a lot more volume. Of course, that's volume. A lot of that is short covering on the way back up, but I do expect this thing to work its way back into this area before it's over. And, we'll see how it behaves when it gets there. You have to remember, if you're looking at gold, gold is also doing a bearish retest regen here. You can see on this chart, you don't have nearly the volume that you did on the way down. That top is 106.65. And so if we go back now to the daily, that 106.65 takes you back into this area. You can see why I'm saying that's about as far as it probably gets. And so, yeah, bounces, tradable, yes, all the above. Sustainable, probably not. Probably really depends on what the dollar does and how weak it gets. Certainly on the first move up, I wouldn't think more than that area. If we look over at the bond market, of course, we've got the gyrations there as well. Big spike down on Draghi. Move back up on Friday on the employment numbers. So the bonds still rotating around, but really this is a weak market looking to get weaker. And you actually have kind of this odd situation where you could get a dual weakness eventually in both bonds and the equity markets simultaneously, which kind of goes against the whole portfolio theory that has been built up and is followed by so many. Finally, on the last point here, let's look at the oil market. On the oils, you actually had more pressure. Cuts under back over on a daily. It looks like it's going to try to hold there. Of course, on a weekly, this thing is still trying to get back to test this low. And so oil, even though you had OPEC saying it can't or won't, it probably can't, cut production because there's so much disagreement about how to do it and whether it should be done, given the self-interest of the various member states that are in it. Can't make a new low with no production quotas in place. That seems to be suggesting something on the idea of some sort of a rotation into this group. Maybe it really is finding some sort of a bottom here, which actually brings me to another subject, and we'll tackle that as I come back to wrap this up. I'll be right back.
If you are serious about trading, TA Today's Tools is the perfect service to help you reach your trading goals. Go to our homepage and click Use Our Tools. Here you will find an overview of this amazing service we offer to our clients. One of the tools you will have access to is the TA Today charts. These charts visually map all the neoclassical concepts that LA writes and teaches about, and is the perfect charting service for neoclassical traders. Learn the trend of a stock you're interested in and see this stock on all 3 time frames. To get started with a free 2-week trial, go to our homepage, click Use Our Tools, and then click the free trial button.
So as we come back here, I want to tackle this last idea, and that is about rotation happening at different phases of the market. And if you think about the market in 3 phases, you can think about it from the perspective of a early, mid, and late cycle type stock rotations. This is, borrowed from Bernstein Advisors out of New York City. It just happens to be one that I was looking for some charts to show you, and this looks appropriate in terms of the rotations that usually take place. This is early cycle, financials, industrials, consumer discretionary. If you think about, stimulus coming in because of the end of a, trying to end a recession, Fed gets easy, government's doing all kinds of stuff. Usually this is the kind of rotation that you see early cycle. This is a typical performance chart of what it looks like on the early cycle. Of course, we're not early cycle. We're almost 6 years into a move higher. That puts us late cycle at best. Let's look at mid-cycle next and what that might look like. Again, your discretionary is still doing well. Your industrials would still be doing well. But you're seeing some rotation where your financials drop way down, right? They were early cycle. And you see things move now. Realize this is a picture of the way it should work, and this is all prior to QE. Will the market behave the same with QE as it has in the past, in terms of the cyclical adjustments and rotations? I don't like to be a person that says, it's different this time. I think that it's going to be something like it was before or has been. I don't think you're going to see a total disintegration of the movement from one sector to another, and those sectors will still probably look about the same. But anyway, this is mid-cycle. This is how it looks. Now let's look at late cycle, which is probably closer to where we are right now. And that is that in the late cycle, you've got energy, telecom, and materials, industrial still being the ones that lead, and everything else, the money's flowing out of those. Now, at this particular point in time, if you think about what's leading in this market, we still have leading here in the technology sector. We still have, this sector being totally depressed. unprecedentedly depressed, quite frankly. You still have healthcare doing pretty well, and staples have been doing pretty well. And so, and if anything, because of the Fed wanting to raise rates, financials look like they may be getting a bid finally. So the question is really, are we in a late cycle or are we not? And if we are we going to see these same sort of rotations, or are we really still in the second phase of this rotation where the consumer discretionary still is outperforming, the information technology is still outperforming, healthcare, right? We still see these at the tops of our charts, and we don't yet see materials, and we don't yet see energy seeing rotation. But are we coming to that phase? Are these the ones we should be moving to? That's the question. That's something for you to contemplate, and something for you to continue to monitor, and probably consider probing into those sectors, into the strongest stocks in those sectors that's potentially going to see that rotation. As far as how do we wrap it up this week and what is this outlook? If we pop back over to the S&P chart, you had this takeaway bar on Friday, big strong bar. This is going to try to go after this top again. And the key is going to be, can it get over it? Because if it gets over it, right, that means you're probably going to get over and hold over this breakdown bar. To me, that still remains the key bar across all the charts you're looking at, right? This bar has to be taken out. If they take out this top, right, there's nothing up there other than the highs. And those highs, there's two of them on the weekly. You break over those, you can get the next big push. That's what the market's trying to do. That's the big story out here. At this point, can you get it? It's not known. If you get it, can it fly? Yeah, it's possible. And that is this week's Neoclassical Wrap. Check me out each week on Sunday evening, and of course on the daily wraps each day, 4 times a week. That's it for tonight. Thanks for joining me. Tell a friend, tell two. You're on YouTube. Go up to the share button, click a share it with your friends, your followers, tweet it, whatever you want to do. Help me help you. I'm LA. This is and was your weekly NeoTA wrap. Have a great night, and I'll see you next time. Good night.